All right, guys, here we go. Let's get into the charts, try to figure out where this thing's heading. All right, so I was actually looking for a gap down this morning. We did not get that gap down. The futures I was watching them a little bit last night. They were kind of all over the place, up and down. But ultimately, what we got was a back test on the NASDAQ futures. So here's your NQ chart. This is just showing the futures. And again, the reason why I watch the futures, because this gives me an idea of where QQQ might trade. It helps you anticipate the gaps, basically. Futures don't have gaps for the most part, and the Qs will gap around. So understanding where the futures are trading at will help you anticipate where the Qs is going to go. And so we got a back test. Here's your trend line right here that we've been in. So basically, we kind of hit this baseline. We based out right here, and then we started to move higher. This is your rally, your bear market rally. We rallied and we held this trend line. We've got several tags of this. You can see we started here, tagged it here, came up, tagged it right here. Then right up in here, we tagged it, bounced off of it, broke. There's your break. This was Thursday, last Thursday. We broke that and then gapped down. So then we've got a back test. So like I say, when you break a trend line, you're going to do one of two things. You're either going to fall right flat, just collapse basically, or you're going to back test from below and then go down. So we did a back test here, and you can back test for a while. I mean, we can pull back and then do another back test and pull back and do another back test. Nothing's to say that this is the end. It just is a good area for adding onto a short. And you want to look at these things from the short side because you broke the uptrend. So now that the uptrend is broke, you want to look for a reversal of that trend, and that's what I've been doing. So entered the day short with a half position. Like I said, I took a half position on Friday, so I entered the day short today with a half position. And for the most part, I just held that position the entire day. So down a little bit on that trade, not a big deal. I mean, I did catch the gap down right here on Thursday with a full position. So I had a full position that I entered right up here at the very top, and then caught the gap down and covered that trade. And I only entered this half position towards the end of the day on Friday. So, if I go to the 1 minute here, just trying to give you guys an idea of the levels that we were trading at. I entered the full position right as we popped right up into here. We started to move higher, and not the full position, the half position. So I have a half position in triple Qs. For me, that's 200 shares. And so I entered that, and then was looking good at the end of the day. I mean, it sold off, and I made another $500 or $600 just on this sell-off right here from that half position. So we closed all the way down here. What I was looking for was a gap down to move lower, but instead I got a gap up and we ramped higher. So trending day today, all we did was move higher. I did not cover my position. I have a half position. I think we are going to move lower. And again, it comes back to this back test. You break down, you back test, you back test. So right now we're just trading right below the trend line. So futures should move lower overnight, depending, and it doesn't mean they're going to move substantially lower, but just lower from this level. I think we'll probably move lower, move down, and then we could back test again. Doesn't mean we will, because you could almost consider this a back test as well. We came up, didn't quite get there, failed, and then ran right up and did a full back test and just traded basically up around that, that resistance line. So I think we'll move lower overnight. That should create a gap down for triple Qs. I don't know where it's going to gap down to, but again, and what I did is actually added to the position. I added another 100 shares at the end of the day, because we got this resistance line on triple Qs on the hourly chart. So here it is. You can see we held this level, and then here it popped right above there, but failed the next day or the next hour. held it right here, and we closed the day pretty much right at that resistance line too. So right around 192.50. I added another 100 shares, and then there's only one other spot where I would be, where we could potentially add another 100 shares, and that would be all the way up here at this trend line right here, this red line. I don't know if I'll ride my position all the way up here. I think if we break above, if we can break above this 194.30 and give it a little bit of room, call it like 195.60 or something like that, somewhere right up in there, you could probably stop out from the trade and then just look to re-enter right up around this red trend line, up around the 202, 203 level. That would be a way to maybe sidestep some of the final upside and get a good allocation, a good position for the next leg down. I'd be taking a full short. For me personally, I'd be taking a full short position. If I get stopped out up around here, then I'll look to get a full short position up around here. Maybe we overshoot it a little. Anything up around here, I'd be looking to establish a full short position for a swing. So, and you could see how, maybe we could get it somewhere right around there. Got a little trend line right there. So yeah, that's how I'm gonna play that. So again, I'll probably stop out anything over 195.50. If we start to, an hourly close above that, if they spike it above and can't close above it, I'll just hold it. But an hourly close above that, probably stop out, and then look to reposition on a short right up around here. Now, this could be a V-bottom recovery. We can't, that's possible. We might have just had a big crash, and now we just get this grinding V-bottom that moves higher over time. A lot like what we saw in 2018. 2018, down here, we had a crash, and then we had this massive recovery for 2019. I mean, you can see from there to the, the first peak right there, it's a 33% gain. So it could do that. I just don't think it's going to. That's my bet. My bet is that we broke the trend line in S&P 500 back in 2018. Purple line right here. I'll just show you guys that. Purple line right there is the bull market trend line. We broke that right here in 2018. And if I go to the Qs and show you guys that, we never broke that trend line in 2018. So here's your bull market. And in we did, but it was such a snapback. We recovered it on the V bottom, really quickly recovered it. And then we were just trading above it. Whereas SPY, we never recovered it. Here's SPY, here's the breakdown. And we were just trading below trend the entire market. Here, I can get rid of this one. We don't need that blue one anymore. So we were trading below trend. So now what do we have? Well, we have massive plunge right here. Big old nasty plunge on SPY as well as triple Qs, and we broke this red line, the decade-long bull market trend line. So Qs is now below trend. I'm talking about the decade-long bull market. I think it's, for me personally, I'm not trading, this is not a bull market to me. This is a bear market. I'm trading it like a bear market. So I'm looking to sell the rips, looking to get short on rips. I'm not looking for buying the dip, because we're below the bull market trend in tech, and we're below the bull market trend in S&P 500, and the bonds broke as well. The bonds back in 2018, this is corporate debt, investment grade corporate debt. Back in 2018, I'll show you here, October of 2018, didn't really break any kind of trend. Here it is right here. It's just, you've got this sideways plateau that these corporate bonds were chopping around in. It's, something like that. And like that. And back in October of 2018, right about, see, corporate bonds were actually selling off a little bit. And then, this is the break in October of 2018 right here. So when all the other markets were selling off, these weren't selling off too bad, and then they just started to ramp higher. So now you see this massive plunge, this massive kind of V bottom in corporate bonds. Again, that's why this is the Fed buying. This is the Fed supporting this. This is not the natural market. It's the Fed. And so that's what makes us different. You've got bonds that broke, you've got the tech sector that broke trend, and you have the S&P 500 that had already broken trend and just confirmed the breakdown. Excuse me. So at this point, it's you've got just, you know, it's just bearish any way you put it. I just don't see any buy the dip opportunity. I see the sell the rip. And so that's what I'm looking to do. So I added 100 shares short today right here at this resistance line, 192.50, and we'll see if that actually plays out and how that plays out. This could easily be the top or the end of this rally. And what else did I do? I did take a short position in this corporate bonds LQD. I did that right up here at this level, 124.60. I saw that it was trading right up in there, and I said in a previous video, if I can get it right up there, that's a great spot. I'm going to take a shot there. So took that, and you can see that we broke trend as well. So we broke trend, kind of went sideways, starting to kick up a little bit. I think we head south now. I think we go down, and you know, that's how I'm looking to trade it. So as we head down, you'll see we'll probably run into some support. Let me see if I can mark this out. Probably right around here somewhere. Yeah, I mean, there is somewhat of a trend line right here. Right, somewhere right in there. It's, you know, it's not perfect. It could be here. So I don't know. It's not the cleanest. So we'll have to just see. But I do think these head south and start to go lower. So I took a short position on these right up in here. We'll see how that goes. All right, and then my last video I put out, I was trying to talk about the dollar, but I apparently paused the video and didn't resume it. The US dollar. So what do we got? Well, we've got an uptrend here, and that uptrend broke, and it broke right here. Little back test. Like I said, you either break and go straight down, or you back test. So you did a little break, you back test, and then a failure. So this is just working its way lower. The trend is down in the dollar as of right now, and it's just going lower. If I go out to the daily chart here, you'll see, you know, we've got support right down here at this 95. We already tagged it once right here, and right there. So that's your support line. So I think eventually we get our way down there. Might take a little while, but I think eventually we work our way back down to this support. And then we'll have to wait and see. We've been in this up channel, but ultimately I think we're going to break this support line. And if you go on the daily, you'll see this is where I'm getting the support. Just scrolling out, lots of data points. Okay, so it's just, you know, I think we easily head down to this 95 and then probably break it and head south. That's really on that one. All right, let's cover some gold stocks. Keep an eye on that trade. That is a longer term trade for me, so I am looking for gold to continue higher, gold miners to continue higher. Let's look at the charts and see what that's telling us, see if anything's changed today. Okay, all right, here's your gold bullion. All right, so what I always like to do is always like to look at the larger time frame, like the daily or the weekly, but daily's good enough, and just make sure the bigger picture hasn't changed. And you need to constantly evaluate the larger picture and make sure that if you're bullish, that bigger picture theme stays constructive, and which means support needs to remain support. You know, you need to see levels continue to hold, things like that on the bigger time frames. So as I roll out, you can see we're in an uptrend. We've got higher lows, higher lows, higher lows, higher lows, and higher highs. We've got this level here on the daily and the weekly, 1570. That is near-term support, and above that we have, you know, we've got 1790 or 1800, and then above that we've got the all-time highs of about 1900. So now we'll zoom in and see where we're at. You know, still looks good. So still holding above support. We're consolidating above this support. This is what markets do. You know, they run up, break a support, and then they consolidate. Run up, and then they'll make the next run up to the next level, and they'll just continue to do this till the trend's broken. You know, so we just while gold bullion is still in an uptrend, we're seeing the dollar get a little weaker now too. So gold's been rallying for about a year. I've been onto this trade for a while, and about a year and a half I've been really onto the gold mining trade, and it's worked out really, really well. But it should continue. So, and while gold was rallying, the dollar was also rallying. So now we're starting to see the dollar get a little weaker. Here's your dollar starting to break down a little bit. In the big picture, it's not a huge breakdown. So we want to see this continue to weaken, but gold is continuing to rally, still holding. So again, gold could come down and tag this 1570 again. It's support. So as long as we hold that, should start to move higher. So that's how I'm treating the gold bullion. Let's look at Barrick Gold, which is, I think, the number 2 largest gold miner. You can see we're just consolidating right here. Now, if I zoom in, this is the daily chart. Daily levels, we've got a level right here around the 1740. And it got really choppy recently just with the market crash and all the volatility. Everything's really choppy. So it put in this really sloppy price action. So we have to start to see how that's going to hold up. This, you could mark this out as a level right here as well on the daily chart. That looks relatively clean. Let's see, does that go back and tag this one as well? Not quite. So you've got a couple days where it held as resistance. I like to see the little overshoot, the tail or the wick right there. When you see things overshoot and then fail, that just validates that level as being resistance or support. So right there, it's good. Did it again right there. Then it broke and ramped up and shot up. So here you gap down, boom, right to that level. And it sold, well, actually it gapped way down and then ramped right up to resistance, broke back above. Here you undercut and actually closed below, which this line was support at the time, came back, closed below support, and the following day, big gap down. So I didn't have that level marked out, but I got it marked out now. And so recently we've just been consolidating above this level. So that is bullish. I mean, that's really all you can say. It's a flag. So you got the flagpole. You could mark this flagpole. If you go to the hourly chart, we'll probably be able to see it a little cleaner. I mean, it could be a small flag like this, or you could say it's a big flag and it goes all the way down to here. But there's your flagpole, and you've got this little flagging action that's taking place, something like this. So a break out of this flag should set us on the track for a break higher, and substantially higher. So I think that's what's going to happen, but again, just got to keep watching the chart, So that's it on Barrick Gold. Silver, let's look at silver. Someone wanted me to point this out, so I have a small position on SLV now. Nothing major, but it's a small one. The chart looked good after this big sell-off, so I got back into it. However, still holding below this resistance line. So you can see if I scroll out here, you've got this downward sloping line. It's not the cleanest line. You have some moves above it, but you got some data points right up in this range. You've got one right here, another one right there. Almost got there. Zoom in. You got one here and here, and then again here. And then as we get in, came right down, tagged it. So it's right in here. And you can see we ramped up, came above it, but then failed and have kind of started to move lower. So if this just can't break above this trend line, then silver's not looking that great. And, probably going to gap fill. Here's your gap right down here. And, there's your gap entry. So if it, maybe it wants to gap fill. You could even see a slight undercut, then ramp up and break out. I don't know, but 1238 could easily be in the cards for SLV. And so we'll have to just keep watching that. As of right now, it's not extremely bullish. It's not extremely bearish either. It's kind of a neutral. It's neutral right here, I would say. So, yeah, that's really what I'm reading. That's it, guys. That's all I got. There's not a whole lot more going on. Again, I took a short position in LQD, added another 100 shares to my triple Q short with a stop a little bit above, not too far above, but we got a little space. And again, that's a stop. That's not I'm not going to get stopped out if it just breaks out on the 1 minute chart. I need to see an hourly close above that level. And then I think we're going to gap down tomorrow or have a sell-off day tomorrow. And that's really all that I see so far in the markets. So we'll continue watching this. If the market wants to continue to go higher, we'll have to reevaluate. But as of right now, sell the rip. That's how I'm looking to do it. I'm treating this like a bear market. I laid out my case earlier with the breakdown in bonds, breakdown in SPY, breakdown in triple Qs. So now I'm expecting the markets to start to move lower. So good luck. Thanks for joining. Give me a thumbs up. Hit subscribe if you're new. Catch you guys on the next one. Bye.